Hey traders, Jeffrey here with Strategic Day Traders. Great to be back with you and give you the recap for how we did this past week. We had another great week, and it was a very exciting week in the Forex world because we had a very, very highly anticipated U.S. Federal Reserve rate release, which I'll get to in a couple minutes. But before we do anything, let's get started with our disclaimer. All of the information provided here is for educational purposes only. It's not an offer or a recommendation to trade futures, stocks, options, or Forex. Please take a moment to read all of the information here. And if you have any questions, by all means, you can shoot me an email at jeffrey@strategicdaytraders.com. Please take a look at our site for a lot of useful information, how to join, what the members' benefits are, and some great new features with our featured partners. So here's how we did this week. We had a great 935 pips total for all of the trades, okay? And as you can see, the way I set my trades up, we have plenty of leeway and room to place our trades, but occasionally we do get stopped out. So we had one stop out on the 18th, okay? But overall, if you placed an average just one micro lot, one mini lot average for each of the trades that we placed here, you netted about $1,000. That's a super low potential loss per trade. And if you're just starting out and you're starting with micro lots, this is the average that you would have gotten. With a bigger account, let's say you're trading with a prop firm on a $50,000 size account or have a self-funded account, you can see you really would have done great. So let's recap the week a little bit. As I said, it was a huge week with Wednesday having its 2 p.m. Eastern Time release of the actual interest rate drop and the press conference with Chairman Powell at 2:30. As anticipated, over the couple of weeks leading into this week's federal Fed news, the question was whether or not there was going to be a 25 basis point or quarter point drop versus a half point drop. And it really went back and forth right up until the last couple of days before. The final analyst total was about 60% or so believed it was going to be a half point drop. That obviously impacted the markets dramatically and the US dollar, which filters down into all of the currencies that we trade. For us, we anticipated a flat set of days just into Wednesday's news and then catching currencies catching their breath afterwards. So it was a little bit challenging to do the analysis this week, but as you can see, we came out just fine. And some other news also impacted this. We had some great news on the yen with Bank of Japan interest rate news. So we're always following, especially the high impact news going into every day and the week ahead. Now, for those of you that are new here, this is how we look at trades. My strategy is based on the parabolic movement of currency pairs. As you can see, we have this envelope or channel that we apply to the charts. And as we move into a bias, let's say a short bias, just like this chart, we're looking for movements to the long side to get into our trades as we get back in. If bias changes back to the long side, we'd be looking for movements outside of the channel on the bottom to get back in on the long side. We always look for the opportunity of getting into trades when we're in an overbought or an oversold condition. So for example, if we're thinking about a short trade right over here and we're overbought just the way you see it over here, and as a third area of confluence, if we are bouncing off of a supply zone or a demand zone for a long, then putting those three together, we've got a great potential trade setup right over here. Now, when my calls come out, we might be somewhere right around here. You could certainly get in market, wait for the bounce, and then take the short down. Or you can wait and get in on a limit order at the suggested target price that I'll put out there. That is up to you, and it's all based on your risk tolerance. So, for example, here is one of the trades that we looked at this week. If you are a VIP member in my group, you will get information and an invite to my private Telegram channel, okay? No one can see these trades but my private members. So, on the evening of 9:17 Eastern Time, this is one of the posts that came out for, let's look at this trade in particular. I suggested going long at 95,802 and a stop loss of 94,942 with an initial high probability target at 96,266. Okay, this is how we did. We got our entry at 95,802, getting 46 pips there. We kept a runner going with the technique that I usually describe to my members for a total for a half a lot of almost $300. Easy peasy, and the other trades also were winners for a total of over 600 or 181, almost 200 pips, coming in at almost 2,000 ticks. Let's take a look at the actual trade. Let me just pull it right up over here. So as you can see, here is when the signal came out. Right about 7 to 8 p.m. Eastern Time is when I published that Telegram post. So the first, this was a long, as I said, the target to get in was 95,802. You could have gotten in right over here at market. Sometimes if you wait for the pullback, you don't get filled, but that depends on your risk tolerance. You're going to lose a little bit of potential profit, but your stop loss might be greater if you get in at market, okay? The stop was way down here, our entry over here, and here's how it played out, okay? In the space of about 30, 60, 90 minutes to 2 hours, we saw a nice movement down, and we hit our projected entry target. We were nicely oversold, just as we were looking for, and if you can see right over here, the dark red bar, we are ready to bounce right off of that supply zone. So now, taking a look at how this played out, and by the way, I had set my charts up with a limit order right at this 95,802, or sometimes a pip or two above to make sure that the spread covers your entry. And then I'm done looking at the charts until several more hours. This is going into the overnight session on Eastern Time. So I'm set up with my targets right up here at 96,166, and a runner either based on trailing price stop or attached to the linear regression moving channel indicator. And just to show you how it played out, we actually continued to drop before turning around. Okay, if I were in the UK, I would have watched this and gotten in right at the outside edge of this channel, okay? But the opportunity still was there for us to get a nice target. We hit our 96,166 before it turned around and came all the way up to 96,266 and then reversed, and we got out on our runner at 96,166. So as easy as that, we got in right over here. We had a little bit more movement down before finally turning around and following the projected bias for our total of, as I said before, let's see, total was 83 pips completely on the trade, okay? So that's very simple. What I like to do is weekly teaching sessions where we actually show you how to set this up. I give you the indicators that you can put on your charts and set them up the same exact way I do. You can use your discretion and wait for better entries. You can just jump in at market, and if you take all of the trades, you will get close to or in the neighborhood of what we're going for as well. There are many times that if we are looking at the chart and it's already overbought or oversold, I'll just jump in at market. But in this particular case, clearly there was a lot of movement to come down to. and some nice supply zones and demand zones to bounce off of. Now, going into the week going ahead, we've got some good news to follow as well. On Monday in the Eurozone, we've got a lot of manufacturing news. Same thing in the UK and in the US. So Monday is a big manufacturing news day. We've got interest rate news coming out of Australia on Tuesday. And then on Thursday, we've got U.S. unemployment news, some final GDP numbers, and we have something interesting that we don't see right after a Fed conference, but Powell is going to be speaking again on Thursday morning, the 26th. The market is going to be listening very carefully for how many more rate cuts he anticipates, if any, through the rest of the year. Right now, smart money is on 1 or 2 more rate cuts. If you would have asked anyone a month or even 2 months ago whether there would be more than one, many people would have said, that's it. Let's just hope for one and no more. But now, especially going into the presidential election, we might see a little bit of a telegraph of a couple more cuts coming up. So that's the week ahead, and a wrap up of how we did this week. Another great week. Looking forward to seeing all of you. Please jump into strategicdaytraders.com for more information on how you can get these signals in my private group, and you can email me directly. I've got a couple of great promotions that we are running as well. Please like and subscribe to the YouTube channel. I publish the results that we have every single weekend. And that's a wrap. We will see you in the next one, and good trading.